Okay. Actually, the funny thing is, people think when you've got a beard, that you've got some money.
And the white.
Yeah, especially if it's white. Oh, if it's white, whoa. I don't line up. It's like, hey. The only problem is they call me Mosaic.
Do you think there's money in the capital market?
Yeah. Oh,
can I make money? Okay, can I get rich?
Look at me. You cannot create wealth unless you're in the capital market. It's pure and simple. Because if you look at every other product, let's look at bonds. Bonds are safe. Look at unit trusts. You can make money, but not the kind of serious money. Yeah. And of course, if you invite me here again, I can talk about the risks and the products that are suitable for people. Like if you're almost retiring, don't be doing serious derivatives. But if you're younger, you can actually start doing that. If you're older, you can do more fixed income like bonds. But you can make lots of money. Seriously, I mean, some good. The Thika superhighway cost 32 billion to build. The cost of building a new airport like JKIA is 264 billion, which means if we can tap into that diaspora money into investment, we can build airports, hospitals. We can do so much.
It's always a question always by in your mind.
Yeah.
The capital market.
Yeah.
For huge infrastructure projects.
Yeah.
Good morning, good afternoon, good evening from the different time zones we're interacting with you from. Welcome to the Capital Markets Authority podcast. I'll be your host, the person, Kefangoiri. I'm happy to be having my good friend, a colleague, Konrad Afande.
Hey.
Good to see you.
My boy.
My man.
It's a pleasure to be here, man.
Good.
Take it away, man.
I'm so excited to be doing this with you.
No, it's exciting. We've talked about this for a while.
Yeah.
It's finally happened. Loving a new studio. How much did it cost you?
You don't want to know. You don't want to know.
All right, man.
But thank you. Good to see you.
No, thank you. It's a pleasure.
You've been well?
I've been well. Working hard, trying to for the country.
Yeah.
And just trying to make a living, But otherwise, I'm good.
Yeah, life's
No
treating
complaints.
you good.
I
can see it though.
No, yeah, I know the beard.
All right.
Yeah.
So what was maybe you can tell us your first interaction with the capital markets?
Actually, it's interesting. Because I lived in the US many moons ago. I don't want to give my age away. And my younger brother actually worked in the hospitality industry at the Marriott. And my younger brother used to work he was actually in Wall Street. And he always came back home and talked about capital markets. And then, and I really got interested. So I applied for it's called FINRA now, Financial Industry Regulatory Authority. It was NASD then. And so I actually worked there for about 13 years. And once I got there, I got a passion for capital markets. And so when duty calls, when Kenya calls you and says, Rudi Nyumbani, I came back home and I said, I have to work at capital markets. And I've been here, as of now, I've been here at CMA for about 15 years, 2 months, 3 hours, and 44 seconds, and counting.
Wow, congratulations. That's
Thank you, man. Yeah.
You've seen different cycles of
Yes. We've gone through 3 CEOs, we've gone through different managements, we've gone through different projects. We're actually working on a capital markets master plan, part 2 now. Yeah. So much has happened.
All right.
Yeah.
So coming into the Capital Markets Authority, what was maybe your first role? Still there?
Yes, actually, my first role was assistant manager for, it used to be called CCMD, what's Corporate Communications and Market Development. Yeah. So, and interesting enough, I wasn't too well versed in communication, so that's something I actually learned on the job. Yeah. But market development was exciting. And keep in mind, I knew the American market more than the Kenyan market. So it was actually a learning tool for me as well. Okay. But once I got the hang of it, it's so exciting. I mean, it's never a dull moment. You don't know everything. Even right now as we speak, I just came from a meeting and the things I didn't know and I'm learning. So it's nonstop. I mean, the financial sector is nonstop. Yeah. If you show me one person that knows everything, I don't know. They're probably, I don't know, genius, the IQ of whatever. So, but it's exciting.
I can resonate with that. Every day you just, there are different cycles, market cycles.
Yeah.
So how was the culture shock or something?
Of course, the culture shock. I mean, that actually, culture shock could happen even in terms, like you can move from here to another company. Yeah. It's a culture shock. Now, of course, there are things that are different in the US that are here, they're different here. Yeah. For example, the biggest thing for me was in the US, every person actually is accountable for their actions and their work. So if you go to a restaurant and you don't like the food, the waiter or the bartender has got the right to compliment you and get you another. But I think here they deduct your paycheck and stuff like that, And then if you want something done, I mean, here you've got to do like a memo for the memo for the memo. Yeah. There's a whole process. So it's a process that you have to get used to. But then you understand. I mean, there's I think in Kenya we have to be, people have to be accountable, because if it's too much flexibility, I think it creates loopholes for stuff to happen. You know, so I'm saying, you know what I'm saying, right?
I see you. You didn't do this as a country, though.
Yes.
But maybe you can take us through your mandate, through your job.
Yes.
What you do for the market.
Yes, actually, what I do right now, I tell people I've got one of the best jobs in the world, because I've been fortunate. I'm not a person who can sit at a desk and read. I'll never be a lawyer. I mean, I can't. If I sit and read documents, I'll die. You find it, you know. I'll be dead. But the jobs I do has to be hands-on. I'm a people person, so I'm the manager for education and awareness. And just like it sounds, I sort of educate the different publics in Kenya and even abroad for foreign direct investments, diaspora, about the opportunities in the Kenyan market. And we're trying to get people to appreciate the different products we have. And in Kenya, you can appreciate that we have many different sectors. You've got Boda Boda, you've got Mboga, you've got the youth. And within each sector, you've got different subsectors: youth and employment, youth, professional youths, youth unemployed. And so you have to create a different message and a different avenue for you to actually engage them so that they can participate in capital markets. What's interesting, a lot of people think, capital markets, and you're a tajiri. You know, leave me alone. I mean, that's just people who have money, you know what I'm saying? So, but people, like even you, because you don't look like you have money yet, but you can still invest it. But I mean, anyone with as little as 100, shillings, 200 shillings. So there's opportunities. So that's really what we do, using different channels: television, radio, media, counties, social media.
So in terms of awareness, education and awareness.
Yeah, sure.
I think a lot is happening in the country in terms of Ponzi schemes and all. I don't think we could be doing well in that front, because I think the other day, somewhere, I can't remember where, we have, I think some preacher went away with the money.
Yeah.
What would be
actually, on that, not to cut you off, but Ponzi scheme, okay, it's a type of pyramid scheme. In Kenya, it's more of a pyramid scheme per se. And what you're talking about happening, I think, Eldoret, and what's happening is you get a person like a pastor, a doctor, a dentist, and you use that person to spread the word, even though it's fraudulent, and that's dangerous. So I think part of what we do as well is investor protection. I don't know if have you ever lost any money from anyone?
Yeah, I'm still waiting for the closure of that case.
Okay.
Yeah, in campus actually.
Okay.
It was my first year.
Okay, well, I meant in capital markets.
It was my first year in campus. That's when I started investing in the capital market.
Okay.
It was through these IPOs.
Okay.
We had a buzz with Safaricom.
Yes.
Equity, So I went in. And all of a sudden, my broker went down.
Yes.
Yeah, so we're still waiting for the case closure. Maybe by the...
No, in fact, now you see, one of the things I say, one of the, during that time period, like people keep saying Kenjan was one of the best and worst things that happened in capital markets. I'll tell you why. Because Kenjan gave a lot of people the belief that you can make quick money in capital markets. You buy today and sell tomorrow, and you get rich. So when Safaricom came, everyone's rushing. People are getting loans and losing money. But I think that's where we come in. But I think obviously now you understand it better. That it's volatile and it's a macro. It depends on the macro. So and that's how we actually come in, to make sure that you don't think it's patient capital.
But where do you think the gap is? Because I feel like as a country, majority of us go for the buzzwords.
Yes.
We don't really peruse the financial and all to get into an IPO.
No. Actually, Kefa, you said it right.
Yeah.
If you look at our cultural attribute, we want to be rich today, right now, and that's why if you look at betting, the average Kenyan spend about 3,000 shillings per second.
Yeah, I saw that.
On betting, and you see, especially the youth. And people have to understand that over 90% of people actually lose money in betting. You see, betting is, the chance of you winning is the odds are against you. But it's the hope of quick money. Capital market is patient capital, and you can make some really good returns in capital markets. And I have a lot of success stories. In fact, I think what I propose is let's have some people that are here who've actually had some success stories. Investing. That would be fantastic.
We will, for sure.
Yeah. So I think it's a cultural thing. You want a tangible asset. You want something you can feel and touch. You know, a lottery, you either get a ticket, you see something, you know, but capital markets, you can make a little money, but you're not splashing the newspaper. But the beauty about it, like right now I'm sitting here, do you know how much money I've got in capital markets? Do you know my net worth?
I can guess.
Okay. Actually, the funny thing is, people think when you've got a beard that you've got some money.
And the white.
Especially if it's white. Oh, if it's white, whoa. I don't line up. It's like, hey. The only problem is they call me Mzee. Yeah.
All right, but now since as you rightly said, it's a culture issue.
Yes.
So, and I think it should be tackled early enough in our maybe education.
Yes.
And I'm sure you could highlight
Yeah.
to us more. Maybe what you're looking at the syllabus.
No, sure.
First interaction, I wish I was taught maybe
absolutely.
Lower school level.
Yeah. You know what you're saying, Kefa, is absolutely correct, because you can't expect the person who's been, you know, there's been a culture infused in you from the time that you're young, and then all of a sudden you can't just change that attribute, you know. So the beauty is we're working with Kenya Institute of Curriculum Development, KICD, and we're working to infuse financial content. When you were small, I bet your parents said, if you have one apple and you add another apple, how many apples do you have? Well, we want to say, if you have one share and you buy 3 more shares, how many shares do you have? And by the way, what is a share? You know, so it's something that we're working on for the past couple of years. So watch this space. The future of Kenya is bright. I think we're going to change that attribute.
Oh, wow.
Yeah, it's very important.
Interesting.
Yeah. I mean, it's something that even when I retire, I want to be rocking in my rocking chair, saying that I played a role.
Yeah, but I also like what you are doing with the university.
Yes. Oh, good God.
There?
Yeah. Oh, yes. Actually, in fact, in the next financial year, we want to launch it again. You know, when you talk about cultural attributes, Kenyans are competitive people. Kenyans like papers. Kenyans like accomplishments. So when you have a university challenge, it becomes a serious, and then it's serious for us because the winner gets to travel to another jurisdiction. The winner and first, second, and runners up, they actually get money to buy shares and invest in capital markets. Okay, we don't give them the money, but you select a stockbroker, and then over the years we then look at your portfolio, so you don't sell and it grows. So I think it's something that's and not just a university challenge. We've done a capital markets mobile app. I think you were here when we did that. Yeah. And you have people are competitive, and not only does it create good competition, constructive competition, but it creates awareness. Okay, so you find that a lot of people, even if you look at like in Strathmore University, for example, Wanafunzi, which is a uni trust, Wanafunzi began because of the university challenge. Some students at Strathmore got together and said, why can't we structure this based on what we've learned, based on the question of the university challenge? So that's something that's really important. Yeah.
All right, but do you think there's money in the capital markets?
Yeah.
Can I make money? Okay, can I get rich?
Look at me. No.
Like on a serious note.
Okay,
I get this question a lot.
On a serious note, let me say one thing. I'll answer that question in one way.
Yeah.
I want you to think of every rich person, every billionaire globally, from Bill Gates, Elon Musk to Jack Ma, name them.
Warren Buffett.
If Warren Buffett,
my favorite.
or Buffet, or even the late Chris
buffet of
movie.
money.
Yeah, I know, buffet of money. So you'll see that every person, you cannot create wealth unless you're in the capital market. It's pure and simple. Because if you look at every other product, let's look at bonds. Bonds are safe. Look at unit trusts. You can make money, but not the kind of serious money. Yeah, and of course, if you invite me here again, I can talk about the risks and the products that are suitable for people. Like if you're almost retiring, don't be doing serious derivatives. But if you're younger, you can actually start doing that. If you're older, you can do more fixed income like bonds. But you can make a lot of money. Seriously, I mean, some good. And I mean, capital markets. If we had more time, I'd break it down for you. But in the next segment,
because I feel that culture has really informed our economic development. Because if you look at, we are not informed on where to invest. I was talking to some friends on financial literacy health check.
Yes.
You go to a clinic.
Yeah.
We should like annually or biannually just go to a financial advisor and approach. Have you ever done one?
Yes. Actually, I'm glad you said that because you've heard of Finaxis, the Finaxis survey. That's done with FSDK, central bank. Yeah. And you'll see that the Kenya's financial health is at about 84%. Okay,
Still high,
84%. No, financial health. If you look at the measurement of financial health, it's not just capital markets. We're talking about it's a huge, you have
Financial inclusion.
inclusion. It has, and M-Pesa has done a lot to improve, get our numbers up. Yeah.
By the way, we should give them their flowers.
Yeah. So the question is, our financial health is 84%, but what is our savings rate, which is one of the lowest in East Africa?
12%?
12%, yeah. And if you look at investment, the Finax has said that our investment in capital markets has gone up from 2.1 to I believe 3.6%, or 2.6. No, sorry, 2.6% to 3.1, which has gone up, but it's still 3.1. That's still a low number. So in terms of financial health, we're doing well in terms of like inclusion, in terms of access, in terms of exposure, SACCOs and all that. But in terms of investment and savings, that's where we need to work on. Because look, let me tell you something, Kefa.
Yeah.
One of the things that you realize, every time you can see somebody living large, driving a nice car, living nice, but the minute there's a systemic shock, like something like COVID, I saw a lot of my friends who all of a sudden had to move their kids to different schools, change their cars, because we tend to live paycheck to paycheck. And we don't think of, what if something happens and I lose my job? Am I okay for the next 6 months? So that's the calculation that you have. And that's where investment comes in. On a rainy day, going there and pick something from, your dividends or your, bonds.
Yeah, I get you. And if I take you back to the betting story you just said, I feel do you feel like it's a competition the capital markets products are having with the betting industry?
Yeah.
And does that, not even it does, there is not a question actually, because it actually do compete with everything, because it's like an instant coffee kind of gratification. The loss, not so much. You'll be shocked to even see like very low level guys. Everyone is on betting.
Yes.
So I think, does that inform the kind of products that we are taking out there? Because as a youth, I'm looking at betting versus for your bill, I have to wait for 90 days.
No, actually, not betting.
90
absolutely.
minutes game.
Actually, not to cut you off, so I don't want to lose my thoughts. Personally, there's nothing wrong with having competing products. Actually, we are competing with just about every sector. In the SACCO sectors, if I tell somebody, put your money in a bond, they'll ask me, what's the bond earning? I'll say, oh, that's 12%. They say, but my SACCO's earning 13%. You've lost the battle there. See? And even insurance products, they have segregated funds, they have guaranteed funds. So I think it's okay to have the products. And the beauty about it is it enables its sector to create more innovative products. In capital markets, we're doing the virtual assets service providers, which I think I think you'll see a section of now that youth, and you've seen what's happened with we call them intermediary service platform providers, like Safaricom, that has Zidi, and you'll see, I think now it's at 6 billion, and Zidi is more, you can come in today, buy daily growth, and you can get out in the next 4 or 5 days, and I think that's almost like, it's a product, it's almost like betting. So I think you'll see this more innovative products that are coming up.
But do you think, I feel we lose a lot of people because we focus on schools, but there are people out there, the boda like you have mentioned. I don't know, I've not interacted with
actually, no, actually, let me correct you. The schools, if you look at the percentage of what we do, yes, the youth are important, only because the youth is the future. If you look at the demographics, we have over 65% that are youth. So, Kefa, that in the next 20 years, the governor or the CMA CEO will be somebody who's probably in the 20s right now, or even younger. So they have to learn the financial markets because they'll be running a country. But then we have a platform of different. We do segmentation, but we have a program for Boda Boda. We have a program for Mamamboga. We have a program for just the different levels.
Do you feel they're effective?
Yes. And I'll give an example. The money market funds, because at one point you realized buying shares is not for everyone, because it's a concept When you go to somebody and say, buy this, you may or may not, it'll take some time, you may not, it's volatile.
Yeah.
It may take you a year or 5 years, but and you may or may not get dividends. It's not certain. In 2018, the money market funds were at 56.8 billion. Right now, I think they're crossing over 500 billion from 2018. I mean, think about that.
Yeah.
And then even at CMA,
Yep.
and I know you're there because you sit on the committee. How many applications for fund management do you see at the management meeting that are coming in?
Every cycle, I think we have.
Yeah. It's like
Every
stuff coming. Yeah. So I think.
Yeah, and also like the innovation around. I think since last year, I think after COVID, I think COVID was a eureka moment. Sorry for the loss of life.
Yes.
But I think globally there was a shift
Yeah.
in terms of innovation.
Yes.
And I think now being in the sandbox, I think you see a lot of innovations.
Yeah,
which
exactly.
really
In the sandbox. Yeah.
Yeah.
In fact, Kefa, you mentioned sandbox, and you're in the sandbox committee.
Yeah.
And maybe we may not have time to talk about it, but that's innovation, and maybe you should have a specific.
Yeah, we will. We
just
are
for sandbox, because we get a lot of questions about that.
So in terms of investment,
Yeah.
like the Buddha, the MMF.
Yes.
Is it not? We are so concentrated on such products. Maybe through you, and given this is your role, maybe you could highlight to us maybe the kind of products we can invest in.
Yeah.
Actually, even the process.
Yeah. No. It's actually we did a campaign targeting border, and there's an app called the Dosika, and you'd be amazed at how they actually got in the app, and we've actually onboarded about 8 intermediaries. You can sign up right now as we speak, and you can actually start. There's a KYC, know your customer, some information, onboarding, and then you can start trading. I'll tell you why equities are good. If you look at we get a weekly bulletin. It's not just the blue chip companies. Okay, let me give an example, and I'm not promoting this company. It's just an example. There's a company in 2020 that in CMA, in NSE, the shares are going for, I think it was, if I'm not mistaken, it was like almost like, I think like 3 shillings a share. And within 9 months, it went up by almost 1,000%.
Wow.
So I think 60 or 70 a share. So which means if you invested 60,000, you'd have made almost 1.2 million in less than 9 months.
And there was no incentive.
And the shift, even a company like if you look at KQ, when KQ was they were delisted first, but when they got relisted, the price went up. So if you put some money there, it goes up. So there's actually money that you make with the volatility, the shares.
And now mention of that, because we normally have a challenge personally, and I've listened to investors, family businesses. Most of these guys don't see the value of coming to the capital markets. This too much regulation, compliance issues, pocket-wise also, it may not be pocket-friendly. I feel there need to be some adjustment or something, like what we did with the pod regulations. What would you say about it? Because I feel...
I'll tell you this, Kafa. If you look at developed economies, the SMEs and a lot of companies raise money to... The mathematics is simple. If you go to a bank versus capital market, it's a lot cheaper coming to capital markets. And we've got the data to prove it. But I think the problem, and I'm saying this very carefully, Kefa, I'm saying very carefully. I think there's a lot of companies that don't want, obviously for the public company, we want to protect the investors.
Yeah.
And recently we have the new public offers and listings, disclosure regulations, where we're allowing the SMEs to not only offer equities, but even fixed income. But they're not coming because of that disclosure. So I ask myself, there are 2 things. One, you're either afraid of that disclosure, which is the question of how does bookkeeping really with the SMEs? Or number 2, issues of being afraid of succession. And you find one of the biggest things we have here, people don't think about succession, and that's why you have people that own big companies, and you find that the dad passes on, and then the kids start fighting. And I don't want to mention names, but and that shouldn't happen. If you're listed, that continues. It's a mindset.
Boiling back to awareness, right?
Yeah. And trust me, I could speak to you forever But if you don't want to list, you see, I can convince you right now to buy shares. I can convince you to go into money market funds, but it's a hard sell to get somebody to list. Because and we've made the process very, very. It's not tedious at all. Yeah.
All right. So on investor protection, I like your mantra. An informed investor is a
Protected investor. Yeah.
Do you resonate with it?
Yes. Because information is key. Okay. Look at the people we talked about earlier in Eldoret. Okay. Now, if they had listened to this podcast, and you have a priest, a pastor, how can a pastor be talking about online forex? How can they're promoting products, but now there's capital markets. You can come and check. Hey, I've just come from church, and I've got a pastor talking about Weetabix forex online. I'm just So we'll check. They're not registered. They're not licensed. And by the way, forex online is one of the biggest. There are a lot of unlicensed entities that are preying on people, even in our jurisdiction. And by the time they come to us, they've already lost money. So that's why it's important. Yeah. So information.
And I have mixed reactions on the forex.
Yeah.
I think given data, I think over 80%.
Over 80, yeah. I think even higher, yeah.
Oh,
but I think your question is, and I don't have an answer.
Yeah.
If close to 90% of investors are actually losing in online forex, why is everyone running to forex?
I think it's the competition with the betting industry.
It's the thrill. I don't know. We research, maybe you can do it. I'm still trying to figure it out.
Yeah. Now I'll ask a question. What has been your come home moment in the capital markets, in your capital markets journey? Like, we got this.
Just you interviewing me.
Oh.
Woo! Score. I'm a celebrity. Whoa! I can retire now. No.
Yeah.
Like in terms of, could you narrow it down? Like in terms of, like my wow moment? Or?
Yes. Your wow moment. Next, I'll be asking you a challenge.
Okay. I can't answer one wow moment, and I'll tell you why. Because what has fascinated me about Kenya is I've been fortunate enough because of my job. It has taken me through a lot of counties, and not just the counties. I've met all kinds of. I've met borders. I've met Mambogas, and what's fascinating is number one, never judge a book by its cover. And I'll tell you what I'm talking about. I have been to events. You do a tent, and some people come. And if you judge a book by its cover, you may look at them and say, okay, you won't understand capital markets. But what they have in their pocket, so don't judge. The people have some money, but it's just a matter of where to spend that money. And then people are willing to learn. It's just a matter of.
Are you being regional?
No. Why? Could you show me the thermos? No. People are willing to learn. So my wow moment is when I realized I can make an impact. Because when you're talking to somebody and they're shaking their head, and then they call you and they ask you about investment, and they do the investment, and they call you back and say, hey, by the way, I'm doing well. Then you realize what you do is powerful. When you can impact someone's life. I think that to me is about my job. That's a wow factor.
And the next one, your worst.
My worst.
Where you saying, man, I'm quitting this job. Not because of personal issues.
I think my worst is, wow. We've had, it's been like every market we've had. We went through COVID. We went through. Stuff has happened, but I think for me the sort of challenge factor is, I would say, in two areas. One, it's a challenge. I thought we'd get listings by now, especially after the public offers and listings disclosure regulations. I thought SMEs would come running. That to me was a big, and then we talk about it all the time. That was a big disappointment. And the other disappointment is there's still a perception, despite all that we've done, that capital markets is too risky and only for a certain class of people. That mindset, And then three, I think we've, especially if you go, now we're talking regional. If you look at, especially like central, because of historical issues like Francis Stool, Niagara Stockpark, they're bitter. And we lost that trust in capital markets there. So we have to work really hard in that region to get them back in capital markets. So, I mean, it's a deep question. It's too deep, man. You're going to make me cry, man.
Yeah. And I find trust to be a very key issue.
No, trust, yeah.
Yeah, and that's why personally I am for stuff like blockchain, because
Yes.
they really enforce trust.
Yeah.
End to end.
Yeah. In fact, yesterday I was at an IFAD remittance conference, talking about remittances from diaspora, and one of the biggest things that came out is trust from diaspora. You know, so you have to be careful. If you issue a bond right now, you've got to be careful what's the proceed for that bond, okay? Because trust is the biggest thing that came about. Because you can have innovation, you can have all these products, you can have innovation, you can have a good regulatory framework. Yeah. But if I don't trust you, I will not take your product. So trust is important.
And talk about diaspora, by the way.
Yeah.
There's a time, was it US?
Yeah.
So these diaspora guys, they want to invest, say, in bonds and all. But the onboarding process is so cumbersome. Like, I remember one telling me they had to come here physically. They're required to present something. And I think that has changed.
Drastically, innovation. In fact, I think almost all our intermediaries have online platforms. And not just an app, but online platforms. Now, the thing that we're working on, and it's a thing that's come up with diaspora, the onboarding process, you don't have to have an ID. And I think there was an infrastructure diaspora bond that was issued way in 2010, and one of the issues that was a challenge was the onboarding process. In the US, you can open a bank account with even, I think, a student ID. You know, so we are working to try and make the onboarding process, like, take for example, I got my ID when I was 40. Oops, I gave away my age, but I was 40.
Kenyan ID.
Kenyan ID. When I was 40. So which means if I had tried to participate in before, I wouldn't be able, which I hadn't. I was going through a proxy through my parents. But so we have to make it easy for the onboarding process to have diaspora come in. And diaspora gets even deeper. We've got diaspora, we have undocumented diaspora who have money.
Sure.
You know? It's a huge chunk.
But then if you have to look at the remittances, they're high.
Yes, remittances. We're doing $5 billion.
Wow, that's huge.
Yeah. $5 billion is huge. And I keep telling people, and that's growing. If you look at $5 billion at the exchange rate of, let's say, 130, that's close to almost 700-800 billion Kenya shillings, right?
Yeah.
The Thika superhighway costs $32 billion to build. The cost of building a new airport like JKIA is $264 billion, which means if we can tap into that diaspora money into investments, we can build airports, hospitals. We can do so much.
It's always a question always by then in my mind.
Why
you don't tap into the capital markets.
Yeah.
For huge infrastructure projects.
Yeah.
But I normally feel like awareness. Kenyans are not aware of even our vision, the Vision 2030, African Agenda 2060. People are not aware so that they can focus their investments there. So we are going for these quick wins because if you're, for example, sure they will have an Isiolo airport somewhere. I'm sure you will do something around there.
Yes. And I think on that note, as you speak, I'm thinking, and I'm not saying this in a bad way, I think there's so much, I call it white noise. I don't know if you know the old TVs, I don't know how old you are, but the old TVs had, when there's no channel, it was like snowy. I don't know if you know what I'm talking about.
Yes.
Like black and white.
Mchele.
Yeah, is that what you call it? Okay, yeah.
No, it used to like
yeah, exactly right.
Yeah.
Okay, so there's a lot of that happening. There's a bit of noise. Like right now there's an incident with I don't want to say names, but that person incident, and there's a riot yesterday. Next thing there's this saga, this corruption thing. Next thing there's this. Next thing is this. So I think right now, and we're a small country to have too much of that noise going on.
Yeah.
And you asked a very good question. Why do people not know about Vision 2030? Because it's been crowded out by all that white noise. So but one of the good things we're working on is, and I'm glad to reveal that with the CBK and other stakeholders, is we're working the National Financial Inclusion Strategy for Kenya, NIFIS. So
it was a highlight in the FinAccess. I've gone.
Yes, absolutely. So when you have it at the national executive level, I think that will drive it now down. Yeah. And you can argue that Rwanda, Tanzania, Uganda, they all have that strategy, and the savings rate is better than ours because it's driven from there. So I think the good things are.
Yeah, maybe tell us about the capital markets open. You guys normally have this.
Whoa. Yes. Please. We're having our 4th annual Capital Markets Virtual Open Day on June 18th from 8:30 to 4 p.m. Again, it's a Capital Markets Virtual Open Day. Please, if you haven't registered, go to our website at www.cma.or.ke and you'll see the flyer. Just click on register and you can register. We'll have over 30 intermediaries that will be there. The ones you're asking me about.
Yeah.
Forget the regulator. We're just creating the platform. But you go in and go virtually into the breakout room. So all the questions you've been asking, go there and ask them one-on-one.
Yeah.
So please, Capital Markets Virtual Open Day, June 18th. Be there.
Yeah, I think I got 5 minutes of your time. I had a book with you. Maybe you can tell us about the programs you guys are carrying out.
Okay.
For awareness. And
There's so many things that we're doing. For starters, we've got we've got 47 counties. And, we've got budget limitations. One of the challenges of investor education is you need money to create awareness. To go on television, especially one that has high viewership, costs a lot of money. So you have to be innovative to find out we've got a resource persons program. Right now we're in 37 counties where we contract individuals to talk to the public and we give them a stipend. We're doing a lot on social media. We're doing a lot on just basically, I think with the youth, a lot of youth programs and webinars. We're doing a lot of like open days at the county level, and a lot of partnerships. We're doing a lot of, some publications that we have. We have a program depending on each target group. For the youth, we're doing a lot of edutainment. And we have a mobile app, a CMA app. And actually right now we're upgrading it and it has more edutainment features targeting even the youth. So there's a lot we're doing. Radio, vernacular radio, that's actually going on right now. Talking about counties, we actually deal with county governments. Kenya National Chamber of Commerce and Industry, who has a good...
So how do you deal with counties? Do you go talk to MCAs? Because they're the policymakers at that level?
We don't... Actually, funny that you say that. I must say, to get the MCAs is a bit of a challenge, because normally you don't go directly to the MCAs. Okay, you have to go to the county government. You see, you can't bypass government and go directly to So and then there's a separation of the assembly and the county government.